All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and the stock market can go up 10% this week. These are not my words. That is what JP Morgan said today. They had a private client note that they sent out, and they went over all of the probabilities about the Fed, and one of the outcomes was the S&P 500 going up 10% in a day. I know it is absolutely wicked. However, and thankfully, they have more estimates, and that's what I'm going to share with you. So I have 4 probabilities today. We're going to go over the top probability for the Fed, the second highest probability of what could happen, and then we're going to talk about some of the bigger moves and the lower probability moves. So we're going to talk about that. We're going to talk about today. I have a bunch of plays. We made a couple of great trades too, but overall, it was a wild day. All of the news from all over the world, and now leading into Powell this Wednesday, it is getting crazy, and whatever happens this week, Chatadonia, it's big. And listen, I need you to listen at least until we get into some of these keys, because we have the answer. And I'm going over all of this early, but there is one thing that will really determine a bullish or bearish outcome. It is super simple, and we have it, baby. So I can't wait to share it with you. It's gonna be exciting, but before we do any of that, I need you to drop your thumbs up on the video. I need you to subscribe, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. It is free 99. We're going to have Powell on Wednesday. You can watch it live. We are going to interpret it live. We're going to have analysts, commentary live. We're going to have a lot of different things, but you're not going to want to miss it. And even leading up into it, we still got a lot of earnings. So hopefully we see you there, but that's it. I think that's it. I just hope I see you there. You know, it's fun. We do it every day. I don't know. I'm hyped, bro. This week, if you didn't watch yesterday's video, I hope you know the stock market these next 2 weeks, it's going to be crazy, baby. So run it.
Walking to the couch, it's the joints on the legs. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, ladies and gentlemen, starting with the first key, there was a ton of news all around the world today, and it hit at the same time, and it really changed some of this positioning that we were seeing. Again, all of October has been very good. These last couple of days, it kind of cooled us down a little bit, but as far as the news, you had more China lockdowns, an issue related to Apple, then the ECB, all of the Eurozone inflation was above 10%. It was very bad. You had news of more taxes from Rishi Sunak. Like this, there was a bunch of different stuff. There's even PMI data, Richmond Fed, and the bad data did not have a good effect. A lot of the data came in negative today, but it wasn't that bad news, good news. And then even in the morning, we brought it up yesterday. I was telling you how Timmerhouse, the Fed leaker, was getting very bearish. That factored into the bonds. And then now, even on top of it, this big candle throughout the day, this was on news that President Biden was urging a windfall tax on oil companies. So if you don't know what this is, it's pretty much saying if a company makes more than their like 3-year or 5-year average, you add an additional tax on any excess profits. This is what they've been doing in the European Union, also the UK. So we've already seen this before, but for America, very rare, a lot of implications, but it hit the market, it hit oil, and then we kind of started dancing from there. But the point is, you couldn't put your finger on one thing today. It was all of this combined. And then, oh, there was even news about more bond supply too. We even reacted, and that added to a lot more of the pressure. There was a lot of things, and at least we got to see that all of this pressure finally, you know, it cooled things down. It's not like we dropped a lot, but it stopped this kind of like automatic squeeze mode. But maybe we'll see what happens. But now, still on the first key, and even to understand it all, even getting ready into Powell, there's a lot of volatility, and the market and how the market is positioned, it is very dispersed right now. Here is the bubble chart. You'll probably notice compared to the last couple of weeks, it's not like a straight line. It's spread out, and it's showing the positionings all over the place, even in a very big way. So we're going to see what happens, but that is key number 1. Now, let's get into the probabilities. Let's understand Powell again. I'm going to talk about this stuff tomorrow. We're going to be ready, but I think if you could get get an early jump. It could help you, and hopefully, too, it helps you understand the market where, remember, nothing's going to matter till Wednesday, but let's talk about outcome number one. It is the most expected thing right now in the bond market. We've been talking about it, both Fed futures all the way down to TLT. Even as the market's been rallying, the bonds have not been playing along. So the most expected outcome that's priced in right now, it would be a 70 basis point hike and then a hawkish press conference where Powell retains his optionality for December, pretty much where he says, yeah, so we're going to raise 75, but we're data dependent. We don't know what's going to happen. We don't know what's going to happen for December. Anything. We have inflation, data dependent, all of that. Keep the optionality for December. That will be hawkish. And then again, if he makes an emphasis to warn of inflation going higher, if he's like the risks of inflation and doubles down on the risks of inflation versus the risks of over tightening, that is what will make this hawkish. So again, this is the most expected outcome, but what I want you to pick up on now is the factors that will make the press conference hawkish or not. And the first thing is optionality in December. If Powell gives an explanation of what he's going to do in December, that will be hawkish or it will be dovish. The other thing is, does he focus on the risks of inflation or the risks of over tightening? How he answers those questions, that is what is going to dictate a lot of this. So that's your first one. The second highest probability now is a 75 basis point rate hike and then a dovish press conference. So the difference between the last one is all about the presser. Same amount of rate hikes, but now what does he do different and what does he explain? Well, what would make a dovish press conference? I feel like I'm saying dovish press conference. That's what I get. But if anything, if Powell gives the lock for December, that is what's going to make it dovish. And JP Morgan is saying, again, all of this is from JP Morgan in their private client note. We got it here for y'all, but they said this could drive the market up, but it's very simple. As far as listening to the presser tomorrow or on Wednesday, if he doesn't explain what he's going to do in December and leaves it open, the minute he says we're doing 50 in December or makes that clear, if that's what we could pick up on, the market is going higher, and that is your key, ladies and gentlemen. We're going to bring this up, but here are the Fed futures. Look at the December odds. Remember /ZQZ22? Brought it up about a month or two ago. We made a trade. I closed out of it, but look at the Fed futures. They have no idea what's going on. You have the bond market moving. You also have the stock market moving, but the Fed futures and what to expect now, nobody knows. It's all 50-50. And now this press conference on Wednesday, that is what is going to determine all of this, and how that moves. That's going to be our final leading bond move into the end of the year. So keep that in mind. But those are the two highest probabilities of what is going to occur. Now, let's talk about the lowest probability. That is your 10%. That is your next key. The lowest probability of what can occur on Wednesday. And JP Morgan said, if this happens, the stock market can move 10% in a single day. And what that would be if there was a 50 basis point rate hike and then a dovish press conference. If they raised by only 50 instead of 75 and went slower and said, yeah, we have all this stuff with the economy, and even talked down and just made it clear with why they're doing that and slowing down with the pressure, they're saying that would be one of the biggest bullish reactions ever. But this is literally the lowest probability. There's higher probabilities that they outline of the market crashing and burning, and technically there is a higher probability of 100 basis points than there is this happening. So we will see, but now let's go to the second lowest probability. This is a bear case scenario. It is a 100 basis point rate hike on Wednesday with a dovish press conference. So pretty much this one's unique because it would allow the Fed to be aggressive and it would accomplish their goal of raising the terminal rate. And then you might even be able to argue that this is them leading into all of the data that they're reporting before. Remember, I said it yesterday, you have not only the midterms, but you have the jobs report on Friday, then the CPI next week after Powell makes a decision. So if they wanted to anticipate it, or maybe they knew, then this outcome could occur where they raise by 100 and then they give a dovish press conference and say, hey, we're raising more, but we're going to chill in December. And now that we have it out the way, it's going to make things things a little bit more easier and then anticipating any data. So we will see. There's a couple more. We're going to go over them on stream. We already did today as well too, but hopefully this helps all of you. We'll get you the final recap tomorrow, but again, Wednesday is game time, baby, and it's going to be insane. This dictates a lot, and even then, after this week, man, all of the events we have are going to be key. So, Chattadoni, I really hope you're ready, man, but those are the main keys. The final one is like the main, but not the main, but here it is, man. Energy and earnings, those are going to be the big X factors this week. We have to deal with all this, and just don't forget about the follow-up data on Friday, but energy stocks, all the news we're getting there, and then even the earnings. I'm telling you, tomorrow morning, after hours, there's a lot of companies still reporting. If there's a big gust of wind that is the opposite of what we've already seen on earnings, then that won't be good because there is still a lot left. So just keep that in mind. Don't forget about it. We're getting ready for Powell, and it's going to be insane, but let us get into the plays. So, right off the bat, ladies and gentlemen, I got 3 stacks for tomorrow. I made a couple of plays. I'm even holding some. And then yesterday, I was saying I wanted that NVIDIA. It was still holding up. It was weird. I think AMD is a better deal now, but I wasn't able to act on that play. Then in the morning, the XLV and healthcare, they ran up a little too much. They were up like 1 or 2% in the morning, but I'm still watching those. And then we went crazy with the news as we expected, but now it even affected some other things like energy and all that. So kind of a double recap from yesterday, but still watching those. But now I got 3 more for you, baby. Let's start with the first one. It's the weed stocks, baby. MSOS, and it's very simple. Today, the pop was caused by news from Chuck Schumer talking about more weed legalization, and the whole idea with this play, it was cheaper than the last 2 weeks when it had that pop. So I said, all right, a little bit better of a risk to reward, but leading into midterms, again, don't make this that deep. Don't even make it that political. Make it stock marketical. You know what I'm saying? It's just there's going to be midterm hype leading into the midterms. My plan is I want to play the weed stocks that we even brought up. Anything related to key issues, like I don't even want to say them all. You're going to get my video flagged. That's just how it works nowadays, but there's an opportunity to play the run-ups, and why? You don't know what's going to happen, but as people talk more about it, it's going to create some of these hype plays. So I went with MSOS. I grabbed 300 shares at like 11.18, so it was a little high. I wanted to grab 1,000 shares, so started with 300. The risk to reward, I said if it comes back to where it was, I would have to buy back, so leaving me room, but then pretty much after midterms, the play is done, or even the day of midterms, I plan on exiting before there for some type of flip, but watch out for that. We're going to hear a lot, and again, a lot of midterm plays. Remember, once we get out of Powell, that is going to be a big focus, but that is play number 1, then play number 2, baby. Some of you like it, some of you hate it. You can't deny it's a bargain, but Mark Zuckerberg, you know, he could end it all. Because literally, he's holding all the value hostage of Meta. So, Chattadonia, that was the play. I added it to the long term. I liked it at $93. I've been saying it. I do think it could go lower, and I am prepared for that. I have it right there for you, but I think there's going to be a little bit of a fight. I grabbed 20 shares on the big long term for $90.01, and then on the small one, 2 of them for like $90.13, and then my sister's account was being weird, so was not able to pick up on that one just yet, but the first 2, we are good so far. But why I'm bringing this one up, not only for the long term, I want you to know that, and you could get your free long term alert. Stop playing with me. Anyways, but it was just simply after Powell, if they do get bullish, if they show they're ready to move and Powell does have a bullish reaction, they've been beaten down. Remember, we have those flip shares. I'm down about $1,000. I totally forgot about those from the earnings, so I would want to average down on those. Remember, I went small the first time, and I made the big average down, and I was actually able to swing a nice profit. Pretty much plan on doing the same thing here, but depending on what happens with Powell, that could give us the green light for a little bit of a rally, and maybe we could finesse our way in and out of that. But I do like Meta, added it to the long term, and I think you're going to get a lot of movement. It's in a death spiral, so, I mean, we're going to see. But that is play number 2, and then finally, play number 3, baby, Uber and Lyft. Very simple. Earnings report, Uber in the morning. Lyft doesn't report just yet. That will be the sympathy, and now, unfortunately, with Uber, the conference call is early. Now, I'll give you this one. Pfizer, they report tomorrow morning, conference call at 10. If you want to play the late late conference call type beat. I don't know what to even call it. Then you could go after that one. But Uber is going to be a little earlier. I think there's going to be a lot of moves off of it. But now the sympathy plays beyond Lyft. Any travel stocks, even Marriott today after hours, they reported. So watch Airbnb. And again, even for the long term. So watch out for all of it. But I think Uber and Lyft, that could be big. And that's one of those S&P names that might move other things. So we'll see how it factors into the whole story of tomorrow and then the day before Powell. But those are the main plays. As far as everything else, man, let's get into the trades. I actually started the morning with Tesla, so this was another one of the shares I bought. Remember I was saying yesterday I wanted more upside. I liked how Tesla was holding compared to everything else I wanted. Again, AMD, NVIDIA wasn't looking too hot. Healthcare already ran. I was like, well, Tesla's holding. I think it's either going to get clapped from here or it might be able to like kind of squeeze a little bit. I wanted some upside, so I went with 25 shares, kept it a little smaller, 227.04, still holding that. Then I grabbed the ES at 38.76. I waited till a good dip in the morning, held that one. Then I shorted 20 shares of Netflix. I just thought it was up there and I liked how it's kind of inverse in the market. And then again, it just hit 300. They have been an outperformer here. So I said, why not? We'll go with some small shares there, 20 shares. Remember what we did with the 10 shares. So I don't think it'll be too crazy, but I did 293.62. Then I covered my MES. Remember, I was down like 500 bucks on it yesterday. I was only down 50 bucks there. I had the upside working in my favor from what I bought there. So I said, hey, let me take the $50 loss, close out of the MES. Then I sold the first ES for $38.95. I got about $925 or like $900 net profit. That was a good one. There's the MOS trades. I flipped Oxy on the windfall tax news, but I wanted it to go faster. And then again, not every oil company has reported. So I was a little worried about it. I closed it only for like $40 there, 40 cents per share on 100 shares. Then I reopened XOM, and now that's the one because they already reported. So shorted 50 shares, 111.2344. I don't know where the other 2 cents came from, but still riding that into there. And then I made one more flip for just another point, got like 80 bucks on that one or 60 bucks at the end of the day. Overall realized about $1,000 on the ES. So that's what I'm holding. That was pretty much all of the plays. As far as the holdings now, the pound got a little bit better there, so they came down again, still holding that. I think around $2,000. I'll be tempted to just take the loss there, but that inflation reading and the tax stuff kind of helped today. And even then, I still do think Powell is going to be our exit. But there's that. The ES, I'm now down on the options. That's all I have. And then again, we realized another $1,000 today. That old MNQ, I like it. I was only down like $100 at one point. This just moves kind of big since it's the NASDAQ. But still riding that. The good old Dow. Best month on the Dow ever. I was on the worst side of it. But that's great. And then the ACAM still up on that. The McDonald's kind of came back, but still riding that again. Anything down now, we're looking for the Powell parachute pretty much. And then the Netflix we're up on. It's not showing the Tesla and the XOM. Those are like 10, 20 bucks. Not anything too crazy throughout the day, but that's pretty much it. It's going to be all about these plays, the earnings, anything leading into the midterms. And then, honestly, I'm going to be playing maybe a lot of day trades on ZN tomorrow, depending on what it does. If you saw today, again, the bond movements, even those Fed futures, just don't forget, man, that is the key. And if Powell puts the lock in December, that's really all you need to know. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember what I said. And I know some people might want explanation. They want me to go deep in it. And honestly, you got to be careful. Don't let this phrase damage you. Don't let this hurt you and let you make bad decisions and get off of defense. I'm telling you. Don't. But all I gotta say is very simple. What was lost will be recovered quickly. I'm out. Amen. I'll see you in the morning. See you on Powell. You're blessed. Amen. Believe it.